So I think fintech itself is a young sector, right? And as it is evolving, it's been 7, 8 years since the word fintech has even come up in our vocabulary. Uh, the next gen economy, whether it be Internet of Things, whether it be AI, ML, whether it be general digitization of even the minutest of things, I think they're going to impact the fintechs in three parts. A, it'll further either reduce the cost of customer acquisition or bring some customers onto the fold which were not accessible. B, it will of course reduce the cost of operations, by way of efficiency, by way of reducing time, by way of reducing cost. Third, I also believe that technologies like AI, ML can also improve or ease compliance levels and fraud detection levels. As fintechs grow, the requirements around compliance and fraud management, both of them will grow, and next-gen technologies can help a lot in making sure that these costs remain within control. In the 8 years of our existence, we have developed more than 100 partnerships with banks, insurers, mutual fund houses, lenders, commerce guys, people who want to, basically any and everyone who want to access Bharat. We have built a lot of partnership with government and allied government bodies because they see PayNearby as a national asset and a vehicle that can help drive financial inclusion and empowerment across the country. For us, some of the interesting partnerships that we see in the near future will definitely be around couple of areas, right? Partnerships that will focus on women and inclusion and empowerment of women, right? We are already working, and will look forward to more and more partnerships that design products and processes ground up for the next 500 million Indians. Not just try and port current products to the next set of customers. I think these two areas, I believe, will be very, very interesting in the near 2 to 3 years. Interesting. So funding winter has moderated or not depends on who's asking for the funds. If the businesses funding winter, I believe, does not exist for organizations which are running sustainable, growing, profitable businesses. By virtue of which I mean that there are a certain set of organizations for which the funding winter is not over yet, and I don't believe it will be over anytime soon. As regards the sources of capital, I believe that while the traditional set of the VC, maybe government grants and all will continue to be there, and the IPO craze that has come up over the last couple of years will also sustain with good fintechs in the market. But I believe more interesting alternative forms of capital will also happen with impact funders growing, with family offices wanting to invest. Those kind of alternative sources of capital will also grow in the near future. I think India is a startup, right? If whichever financial product you look at, 20%, 25% of Indians say zyada no product has reached. And I say 25% because digital payments has reached to about 300 million Indians. So I don't believe it is a segment specific funding that will happen, but customer tangible value generating companies will get funding across segments. The other kind of companies that will get funding is companies who generate value for these companies who are customer facing. So it could be fraud control companies, it could be digitization setups, technology providers, so on and so forth. So I do not want to speak for others, but for us, because we've always been intermediaries working with regulated entities, compliance has been a part of our life from day one. Compliance is not an afterthought. We have to work within boundaries. And to some extent, I would say we are over-regulated because the regulators have their one regulation that we have to live with, and the regulated entities have additional layers on top of which, the confines of which we have to work within. As regards the cost of compliance, I think between you and me, I don't think operating cost of compliance for us has gone up significantly. However, because of regulatory constraints and compliance burdens being put on regulated organizations, some parts of businesses have definitely seen a hiccup. That is a side way of how compliance costs have gone up for us. but the actual operating cost is in single digits and it's not gone up for us significantly.